If you've ever used a VA loan before, there's a chance your certificate of eligibility has a line that reads something like previously used entitlement, paid in full, not restored. Maybe you sold a house 20 or 25 years ago, the loan was paid off, and you've moved on. But now you're ready to buy again, and your COE still says that that old entitlement was never restored. In this video, I'm going to walk you through what that language really means, why it shows up, when restoration is helpful and when it's optional, so that you can plan your next move with clear information instead of guesswork. Looking at your certificate of eligibility and seeing the phrase paid in full but not restored, it can feel confusing, especially if the loan tied to that line was paid off decades ago. So let's break down what actually happens behind the scenes. So when you use a VA loan, the VA guarantees a portion of that loan for your lender. That guarantee is called entitlement. So you have a base level of entitlement, often shown as $36,000 on the COE. You also have bonus or second tier entitlement, which is tied to the county loan limit set by the Federal Housing Finance Agency, or FHFA. So when you take out a VA loan, part of your entitlement is charged to that loan. When the loan is paid off, you have two paths. You restore the entitlement so it's fully available again, or you don't restore it and the COE continues to show that some entitlement is still tied to that prior loan. This is where paid in full but not restored comes from. It tells the lender that this old VA loan has been paid in full, but the entitlement was used for it has not officially been reset. The important part is, even if that old entitlement wasn't restored, you may still have remaining entitlement that you can use for a new purchase. The VA handbook specifically says that if previously used entitlement hasn't been restored, available entitlement is simply reduced by that amount. It doesn't automatically block you from getting another VA loan. A lot of veterans assume they must restore their old entitlement before they can buy again, but that isn't always the case. The VA actually gives you and your lender a few different ways to move forward depending on how much entitlement you have left. This is one of the biggest misunderstandings. So if you read the VA lender's handbook, when a veteran has entitlement tied up in a prior loan that hasn't been restored, the lender has three options. Have you bring a down payment that bridges the gap between your remaining entitlement and the 25% guarantee most lenders look for. You can make a loan with a limited guarantee based on only the entitlement you still have available, or have you apply for restoration of the previously used entitlement so that your certificate of eligibility reflects the full amount again. Hint, hint, the last one is the best interest of the veteran. So in other words, restoration is allowed but not required in every case. So if you have enough remaining entitlement to give the lender the guarantee that they need, they can move forward without restoring anything as long as they're comfortable with the guarantee amount and the rest of your file checks out. So that said, there are some good reasons to consider restoring, which we'll talk about here in a minute. Once you know how entitlement works, it becomes much clearer why that old not restored note matters for your next purchase. It's not about whether you're eligible for another VA loan, it's about how much the VA can guarantee on your behalf this time around. So let's connect this to something practical. So your entitlement is the piece that lets you buy a home with no down payment in many cases, stay inside VA guidelines instead of switching to a conventional loan, avoid private mortgage insurance and some of the stricter requirements in other programs. So when you have full entitlement available, the VA doesn't set a hard loan limit. Your maximum loan size is driven more by your income, your credit profile, your debt and obligations, and the property's appraised value. When you don't have full entitlement, it's because some is still tied into a prior loan, and that changes a few things. So your remaining entitlement is calculated using the county loan limits. The lender looks at how much guarantee the VA can still provide, and if that guarantee is less than 25% of the loan amount you want, they may ask for a down payment to make up the difference. That's why your COE's language and entitlement history matter. They don't tell you whether you deserve another VA loan. They tell the lender how much the VA is willing to guarantee on your behalf for this loan. If you've used a VA loan before and didn't restore it, the next step is figuring out how much entitlement you still have available. This calculation is straightforward once you understand the pieces that go into it. So let's talk about how the numbers actually work in plain language. When you used entitlement before and it hasn't been restored, the VA looks at three things. The current county loan limit for a one-unit property where you're buying, so it's based on the FHFA conforming loan limit, the fact that VA will typically only guarantee 25% of that limit, and how much entitlement was charged to your prior VA loan. And so here's a simple example just to illustrate the math. The numbers will change based on the county and your actual history, but let's say that your county's 1-unit loan limit is $800,000, just for example purposes. The VA is willing to guarantee 25% of that, so $200,000 in total entitlement for that county. Your COE shows that $60,000 of entitlement was charged on a prior loan that was paid in full but not restored. So to find your remaining entitlement, they'll subtract the amount that you've already used from the total guarantee. So if $200,000 is the maximum guarantee in that county, minus the $60,000 entitlement that you've already been charged for that old loan, means that you've got $140,000 in remaining entitlement. That remaining entitlement can still support a significant loan amount. So most lenders are looking for a VA plus down to cover at least 25% of the loan. So in this example, $140,000 times 4 equals $560,000. That means that most lenders could go up to a $560,000 loan with no down payment and still have the full 25% cushion, even though some entitlement is still tied up in the old loan. This is called using your bonus entitlement. If you wanted to borrow more than that, you might be required to bring a down payment. Maybe you have to restore the entitlement or pursue a different loan structure. So the key point is that paid in full but not restored doesn't mean you're out of luck. It means the lenders has to look closely at how much guarantee is still available for this next purchase. Once your remaining entitlement is clear, the next question becomes whether restoration makes sense. And while it isn't always necessary, there are times when it can save you time, money, and future headaches. From the VA's point of view, as long as the guarantee math works, you're allowed to move forward without restoring that old entitlement. But from a planning point of view, there are some reasons you and your lender might choose to restore. Reasons restoration can be helpful: it simplifies your COE. Everything is reset. There's no old entitlement hanging out in the charged column. It can help avoid surprises later, especially if there was an assumption on that old loan that you didn't fully understand at the time. It makes it easier to calculate your buying power the next time you move because you're starting from full entitlement again. Situations you might not need to restore right away, you have plenty of remaining entitlement, even with that old charge. Maybe your new loan amount is well within what your remaining entitlement can support. Maybe you and your lender are both comfortable working with a limited guarantee or adding a modest down payment if needed. So restoration isn't about VA allowing you to buy, it's about clarity and flexibility. So for this purchase and for whatever comes next, if you decide that restoring entitlement is the better option, here's what the process looks like in real life. These steps are familiar to lenders who work with VA loans regularly like myself, and most of the paperwork can be handled for you. Here are the most common paths that VA recognizes. One example is you sold the home and paid off the VA loan in full. So in this case, you can request full restoration of your entitlement. So your lender can usually help by submitting the request through the VA's web LGY system, along with proof that the old loan was paid off. Another example is a qualified veteran assumed your VA loan and substituted their entitlement. This is called substitution of entitlement. If the VA approves the substitution, your entitlement tied to that property is released and can be restored. Another example is you paid off the VA loan but kept the property. So VA allows a one-time restoration in this scenario as long as certain conditions are met, meaning the previous loan was fully repaid and the new VA loan will be used for another primary residence. This is why you will sometimes hear one-time restoration mentioned in conversations about keeping a home but resetting the entitlement. So most of the time, the process starts with VA Form 26-1880, which is the request for a Certificate of Eligibility. On that form, there's a section specifically for previous VA loans and restoration. So if you're working with a lender that does a lot of VA business, they can usually pull your COE, identify what's still showing as charged, collect the payoff or assumption documents, and submit the restoration request directly through the VA's online system. That way you're not trying to piece it together on your own. Something that surprises a lot of veterans is how an old VA loan, even one paid off 20 or 25 years ago, can still appear on a COE. Here are a few reasons why this happens. So maybe the loan was paid off, but nobody ever submitted the restoration request, so the entitlement charge stayed on your record. Maybe there was a loan assumption involved. Maybe a non-veteran buyer took over the payments and your entitlement stayed tied to the loan that they assumed. Maybe paperwork from the time of the sale was never fully synced with the VA system, especially on older loans. So going through restoration now can surface issues like an old loan that's technically still active under someone else's name, maybe a payoff that was never properly documented to the VA, or simply a clerical error that needs to be corrected. So it's much better to discover that before you're under contract on a new home than during the middle of your next purchase. With all the moving pieces, it's no surprise there are myths about how entitlement works. So let's clear up a few misunderstandings that come up often and cause unnecessary stress. Myth number 1, if my COE says paid in full but not restored, I can't use my VA loan again. Fact, you can still use your VA benefits as long as you have enough remaining entitlement or can bring a down payment to reach that 25% coverage that lenders look for. The VA handbook specifically allows lenders to proceed without restoration in these cases. Myth number 2, restoration happens automatically once I pay off the loan. Fact, restoration is not automatic. The VA needs a formal request and documentation that the prior loan obligation has been satisfied. That's why VA Form 26-1880 and the WebLGY system exists to process those requests. Myth number 3, if I still own the home I pay off, I can never restore my entitlement. Fact, VA allows a one-time restoration in certain cases where you've paid off the prior VA loan but kept the property as long as the new VA loan will again be used as a primary residence. The details matter here, so it's important to talk through your specific situation with a lender who knows the VA guidelines well. Myth number 4, entitlement and loan limits are the same thing. Fact, they're related, but not the same. Entitlement is the amount the VA is willing to guarantee on your behalf. Loan limits, which follow the FHFA's conforming loan limit guide, affect how much entitlement is available in a given county when you don't have full entitlement. When you do have full entitlement, the VA does not cap your loan amount based on those loan limits. When you have partial entitlement, the limits help determine how far your remaining entitlement stretches without a required down payment. It's one thing to hear the rules, but it helps to see how they apply in a real-world scenario. Here's the kind of situation where paid in full but not restored shows up and how the process typically unfolds. So imagine a veteran who used a VA loan 25 years ago, sold the home and paid off the loan, and never requested restoration, and now wants to buy again using a VA loan. Their COE says the old loan is paid in full, not restored, and it shows an entitlement charge from that prior loan. Here's how that might play out. We would pull the COE and confirm how much entitlement is still charged. We'd check the county loan limit for the new property and calculate the remaining entitlement based on today's numbers. If the remaining entitlement is strong enough to support the loan amount that we're looking for, we can move forward right away using the existing entitlement or help them restore entitlement during the process so that their COE is fully cleaned up for the future. So if we discover that that old loan was assumed or never fully closed out in the VA system, we deal with that now instead of 3 moves from now when it suddenly becomes urgent. So the end result is that the veteran understands how much buying power they have today, whether a restoration request makes sense, and what the plan looks like for their next move, not just this one. If you used a VA loan before, the easiest next step is getting your eyes on the COE and seeing what's still tied to your entitlement. From there, you can decide whether restoration is worth it or whether your remaining entitlement is already enough for your next home. And here's some simple steps you can take. Number 1, get a fresh copy of your COE. You can request it directly through the VA or let a VA experienced lender pull it for you. Number 2, look for any prior loans labeled paid in full, not restored. So make a note of the amounts charged to your entitlement. Number 3, have someone walk you through how much entitlement you still have. This will tell you how far your remaining entitlement can stretch without a required down payment. Number 4, decide whether restoration makes sense right now. So if you plan to move again or your history is complicated, restoring now can save headaches later. So if your remaining entitlement is more than enough for the home that you want, you may choose to simply use what you have and keep things simple. And number 5, ask questions until it all makes sense. There are no bad questions here. Entitlement and restoration are technical, and you deserve clear, patient answers. If your COE says paid in full but not restored, and you're not sure what that means for your next home, we can talk through it together. Use the link in the description to book a call with my team, and we'll pull your COE, look at your remaining entitlement, talk through whether restoration makes sense now, and build a plan that fits your budget and long-term goals. And if you want reliable, plain language explanations that help you feel confident in every part of the home buying process, hit that subscribe button. As always, my goal is to help you make informed home buying decisions and win with Wade. I'll see you next time.